It's not easy to buy a nice home in San Diego these days. In fact, it's practically impossible unless you have a very impressive income or very generous relatives. The median cost of a home here has jumped to $85,000.
Affording a home in the United States can feel like winning the lottery, especially for millennials. You'd need a stroke of luck, almost akin to Mr. Beast gifting you a house. However, it's not just millennials who are grappling with this issue. A broad consensus prevails that, despite a robust job market, our economy isn't in the best shape, and the data supports this view. U.S. consumer sentiment reflects our shared sentiment on this matter. The median age at which a millennial can afford to buy a home has now climbed to 36 years, the highest level on the index since 1981. We find ourselves in one of the most peculiar and challenging periods in history, where it may be both the worst and the best time to purchase a house. I'm not a real estate agent, so I don't have any vested interest in swaying anyone's decision either way. However, this question has become a widespread topic of discussion on the internet and cable news.
Back, mortgage rates racing towards 8% now, locking homebuyers out of the market, with mortgage demand plummeting to a nearly 3-decade low.
So we know these high mortgage rates are wreaking havoc on the housing market. They're a disaster.
The problem we're facing is that buying a home has become very tough due to high prices. In fact, it's the hardest it's been in almost 40 years, going back to around 1984. It's so bad that some people are saying it's even worse than when the housing market crashed in 2006. We can see this using something called the Home Affordability Index, which shows how easy or hard it is to buy a house. When the index goes up, it means homes are more affordable. But right now, it's going down, which means homes are becoming less affordable. All across the country, it's clear that we're in a tough spot. It's now harder to afford a home than it has been since at least 2008. And if you're looking to buy a house in big cities like Honolulu, San Jose, Los Angeles, or San Francisco, the prices are crazy high. They're about 11 times the money most families make in a year. So, unless you're making a lot of money, buying a house seems nearly impossible. Some people are worried that this kind of growth in home prices can't last forever, and that there might be a crash in the housing market. Others are more hopeful and think the real estate market will keep growing, but not as fast. In this video, we'll explain what's going on in simpler terms, so you can understand the real estate situation better. We'll break it down for you, step by step. Let's dive into it. So, should you wait to buy a house, or should you buy right now? The honest answer is that no one can predict the future. Thank you for watching. Joking, but here is what the market says. Now, the current situation in the housing market is somewhat peculiar. The fundamental factors seem to be out of balance. Home sales are declining, yet house prices are on the rise. In 2023, we sold about 13.5% fewer homes across the country, but prices have increased by 3% this year. Now, let's get into the nitty-gritty. I'll start with my opinion, and then back it up with data. Ultimately, you'll need to draw your own conclusions. This situation seems to be true in many US cities. Take Vegas, for example, where home sales have dropped by 43% from 2021. If we go back to 2019, the decline is still significant, close to 40%. So, we're definitely selling fewer homes this year than we did in the past couple of years. Logically, if sales are down, house prices should follow suit, right? But they haven't. In fact, the median home price in the Vegas area reached $449,000 in September. To put this in context, if prices remain stable for the rest of the year, the Vegas market would close the year with a 7% increase, which is pretty remarkable. Prices are not coming down, and there are two significant factors at play here: inventory and interest rates. Inventory refers to the number of homes available for purchase. In Vegas, for instance, there were about 3,900 homes for sale in September, and 1,600 homes were sold that month. This means that if no more homes were listed for sale, we would run out of homes to sell in approximately 2.5 months. Historically, this is incredibly low, because a healthy balance between supply and demand should be closer to 5 to 6 months of inventory. So, why is inventory so low? There are a couple of reasons. First, home sales are down, as I mentioned earlier. The second reason is that people can't afford to sell their homes right now. It might sound strange, but over 90% of home buyers have a mortgage rate of less than 6%. No one wants or can afford to swap their current mortgage with one that has an interest rate close to 8%. This situation is not limited to a single area. It's affecting the entire country. The outcome of this is a reduction in the number of homes available for sale and a decrease in the number of homes being sold. This decline has had a significant negative impact on both lenders and real estate agents.
Yeah, it's a tough market. If you're a realtor or a mortgage lender, you're feeling like this is a serious recession. If you think about it, we went from about 6 million homes at an annual pace down to about a little over 4 million homes at an annual pace. That's roughly a third drop in the business in your industry. So when you put on top of that the disappearance of the refinance business, it's feeling really rough for the mortgage space.
We're selling around 1/3 fewer homes, and this can be largely attributed to interest rates. People are finding a way to work around this issue by choosing to buy new homes. Home builders can absorb the impact of higher interest rates and offer their customers more attractive rates or incentives, such as substantial contributions towards closing costs or upgrades for their new homes. Opting for a new home isn't a bad idea, but it comes with a downside. You'll find that there are considerably fewer new houses available this year compared to just a couple of years ago. For instance, there's a surge in new construction builds like condos and townhomes. While these options are appealing, they are often listed at prices close to $400,000. Now, this is a significant amount of money that would have bought you a single-story house in a nice neighborhood not too long ago. Perhaps it's a sign of the times, but $400,000 for a townhouse in a place like Las Vegas doesn't seem quite normal. The demand for buying homes has slowed down, but so has the supply. We're currently in a bit of a stalemate between buyers and sellers, and prices are not making dramatic moves. If there is any change, it's happening at a slow pace. So, the big question is it better to wait? Here are a couple of reasons why you might want to consider waiting to buy a house. First, a whopping 36.3% of homes are being sold over their list price. This is significant, especially considering the relatively high interest rates. However, it's likely that we will eventually return to the historical average of inventory levels, and interest rates will also come down. According to the Federal Reserve's latest predictions, and what they've hinted at, rates are expected to decrease sometime in 2024. This means more people might want to sell, leading to higher inventory. However, it's essential to note that a crash, as some have predicted, might not be on the horizon because many potential buyers are patiently waiting on the sidelines. Another reason to hold off on buying is if you believe in following the money. When individuals with multi-million-dollar net worth were asked about their opinions on real estate, they expressed concerns about home prices, interest rates, inflation, low inventory, and market performance. Despite having the means to invest, wealthier individuals are staying on the sidelines because they worry that high inflation might erode the ability to borrow money.